welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. But Cheryl, we have been waiting for the Friday, for the whole week rather, and I guess so were our viewers, because today it's Buy Now, Sell Now Pathshala today, and Kunal Bothra will be joining us live shortly to help us with the learning for this particular Friday. And not just that, post that we will connect with our experts to help resolve all your stock related queries. But before that, let's have a look at what the markets are up to. So Cheryl, very muted sort of an action on the benchmark indices, but some of the counters are showing exceptional move, especially the power pack.
Absolutely. Very good morning to you, Shrishti. And power is the name of the game, isn't it? Because we've seen a sharp rally coming on these counters day after day. Today being no less as well. So you look at the top, there you go, Tata Power, 4% uptick, top gainer on the Nifty. NTPC up about 3.7%. You also have Power Grid that is seeing good gains. And not just that, a short while ago, Shrishti and myself were talking about even you have these power financiers that are seeing good gains. So PFC or REC, both of them are surging in trade today. 9% uptick coming in for PFC and 8% uptick coming in for REC. But which are the other set of gainers in trade today? L&T, that one is again knocking on the doors of record high levels. You have L&T that is among the top gainers on the Nifty. Bajaj Finserv, Tata Motors are the other set of gainers. But on the flip side, let's see which are the stocks that are losing in trade today. You have Hindalco, JSW Steel, SBI Life, Apollo Hospitals, Wipro, all of them are weak in today's trading session. As of now, if you look at the advance decline ratio, very much tilted in the favor of the advances. So let's wait and see how the trading transpires through the course of the day. Talking about the sectoral indices, and yes, power sector is definitely among the top sectoral gainer. You have realty also that is seeing good gains in today's trading session. If you look at the broader markets, holding on to the positive territory, much higher than the benchmark indices. So yes, outperforming the benchmark indices once again. But on the flip side is the pharma index that's under pressure. 0.6% downtick coming for pharma. Metal also under pressure, as well as FMCG and IT. So you can say defensives are taking a backseat in today's trading session. But yes, Shrishti, that's the way how the markets are looking like. But today being Friday, and you did hit on the fact that we will have a very interesting topic to talk about, and this time's BNSN Pathshala. So should we take it across to Kunal directly?
Well, yes, Cheryl, let's go across to Kunal, and onto the screen we can see a very interesting topic, a topic which I really don't know about. So let's go across to him and learn about that. Very good morning, Kunal. Over to you.
Absolutely. Thank you so much for that, Srishti, as well as Cheryl. Good morning to all of you. Now, today's topic is interesting. It's something which is generally not present in most of the classic notes on technical analysis, but this is more of an observation-based analysis for stocks and patterns. Now, the topic for today is 3 to a break, which means how 3 important candlesticks, when the formation happens, for the particular stocks or asset classes, leads into a very strong breakout or breakdown. In fact, many times we've seen actually trends reshaping themselves when we see such kind of a 3-candle consolidation. So the reason why consolidation is very important, because there are 2 important patterns which happens in consolidation. If consolidation happens at a top, which means there is some sort of distribution which is happening to the stock price, or when consolidation happens when the stock is about to get into a turnaround, we call it as an accumulation for the stocks. So it depends on how the consolidations are placed into stock prices. We've taken in case 3 monthly candles over here, because that gives us a broad term of consolidation for the charts, and we've taken a couple of examples over here. The first one is Coal India, a stock which has been in focus over the last couple of days based on the kind of rally which we've seen for the stock. Now, what's classical about the charts for Coal India is 3 months of, these are 3 candlestick patterns, and whenever the stock gets into a 3 months of consolidation, which means the range for the stock is restricted towards a point of maybe 4% to 5% on a monthly basis. Post that, we see a very big breakout into the stock prices. Now, how do we spot those breakout? Whenever the top or the bottom of this consolidation gets breached, whichever gets breached first is where we expect the stock to get into a breakout or a breakdown mode. In this case, when the stock had broken past about 240 levels, which was the previous or the 3 candle high, that's where we expected the stock to get into a big breakout mode. We saw a similar kind of a stance for Coal India in 2021 when the stock went into a 3 month of very tight range. The moment the stock managed to break out, it led into the stock going into a very strong uptrend. We'll see one more example for the stock in a similar kind of a time span. where it's given a 3 month of consolidation. That's Bajaj Auto. And look at the history of the charts over here. 3 months of tight consolidation for the stock, and a stock like Bajaj Auto, which is generally a moderate to high beta stock. The moment the stock managed to break below its support, we saw the stock falling very sharply. And on the other hand, when the stock got into a break, a consolidation and a breakout of this consolidation on the upside, we saw the stock moving up from 3,000 to almost at 4,500 level. So that's an interesting topic. 3 month consolidation or 3 to a break, which leads into a very strong and fierce trends on stocks.
All right, something very new for all of us to learn in this time, Pathshala, something that we've not even heard of actually. Thank you so much for that, Kunal. 3 to a break is the topic that we've discussed in today's Pathshala, and it won't take 3 for a break right now. It'll just take a second for us to slip into a break and come back for more on the other side, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on our WhatsApp number, and that will be flashing on your screen very shortly. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as your time horizon. All these 3 criteria are extremely essential, because in that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Ashish Kapoor, who will be joining us very shortly. And before I kickstart with the queries, also viewers, you can actually watch us live. If you cannot catch us live on the television set, then you can definitely catch us live on etnownews.com. We are live on that on the website as well, so you can watch us on that platform as well. Also, with that, let's kickstart with the queries then. Good morning once again to you, Kunal. And the first query that I have is coming in from Geeta. She's writing to us from Dubai, and she has 500 shares of Jubilant Food that she's purchased at the price of 502 rupees per share. She wants to know, is it worth holding on to, or should she add some more of this counter, or what sort of strategy should she adopt?
Very good morning. So for Jubilant Food, I would suggest to hold on to the stock. Recently is where we've seen the stock breaking out, and it's a very minor breakout. When you look at the peers, many of the peers are trading at 52-week highs and life highs for themselves, which means that the potential could be significantly high for Jubilant Food. The stock has recently managed to break past even above the 200-day moving average. So short-term charts, medium-term charts, as well as the peer comparison for the stock in terms of price is probably an indication that there could be a significant upside for the stock over the near to medium term. I would definitely suggest to hold on Jubilant Food.
Okay, Kunal, the next query is also for you. This one is coming from B. Soumya. She has bought shares of Zomato, but at a price of 100 rupees where she entered, and she also has Renika Sugars from a price of 53 rupees. She wants to know the short-term target in both of these.
So Zomato I'm extremely bullish on. I think when the stock was at 90-94 levels just about a week or so back, I'd flagged off for a target of 122 based on retracements and extension for the stock on the daily weekly chart. So 120 is where I would place the targets for Zomato. So would maintain a hold on the stock. If you've bought, then I think you should continue to hold on. Look to add in case if it dips down to say 96, 97 levels for the stock. For Renuka Sugar, I would be a bit iffy because right now many of these mid-cap, small-cap, 2-digit stocks have been flying extremely high, but it's not one of the best stocks from the high beta space like sugar. And I think time and again I've been mentioning that when you're trying to concentrate your portfolio into a high beta sector like sugar or real estate, etc., it's always best to try and buy a formidable name rather than buying an extremely high beta stock within that space. So I would recommend that if you can switch from Renika to Balrampur Chini, that could be a good switch from your overall portfolio perspective.
All right, this one is coming in from a senior citizen who's writing to us, and little longish query, and he's saying that he has more than he's been invested in markets for over 50 years now, and he has investments in approximately 150 stocks is what he's saying. But he wants one guidance on Tilaks India. He is already holding this counter, 100 shares of this counter at the price of around 196.75 rupees per share. He's been holding on to it for the last 3 years. He's saying the stock has already crossed his buy price now and is going up. He wants to know, is it worth holding for the long term, and what's the future prospect of this company? This one is the name of the viewer is Mr. Kamath, who's writing to us from Bangalore. What's your take on this, Ashish? A very good morning to you firstly. And have you tracked this company, Tilaks India, by any chance? And fundamentally, do you think it makes sense for Mr. Kamath to stay put with this one for the longer term?
Yeah, good morning. Thank you so much for having me over. Yeah, Tilaks India, I think is a very good stock. He can continue to hold on. I haven't tracked it lately, but yes, it is a good stock, well managed company, and I think he should continue to hold on. I think the returns from here should be pretty decent.
Okay, moving on to the next one then. And Kunal, this query is from Satya and he bought two counters. Firstly is MCX, his buy price is 1360 rupees, and the other one is Divyani International, one of your favorites, and he entered at 170 rupees. He's a long-term investor. Any targets on both of these counters?
Hold on both of these stocks. Devyani International, very difficult to place a target, but I think the stock should see a significant upside depending on how long you can hold on to the stock from a long-term time frame. So again, as I said, difficult to place a target, but I would suggest to hold on to the stock. And you've already created a very good buffer in terms of buying the stock at its major support levels of 170, something which I've been flagging off, I think, over the last many quarters. Now, MCX is a strong potential breakout candidate. I think on the weekly charts, last week the stock managed to come back towards a 1.5 year swing high or a weekly closing high. That could be a very strong case of a turnaround for MCX. Again, a stock which I would rate it as a buy, and if you're looking at it as a target, I think 2000 levels, which was the previous high in 2021, if I'm not wrong, for MCX, that should be taken out in this leg of rally.
All right, this one is coming from Sunny, and this one also is for you, Kunal. 50 shares of Oracle is what he has at a price of 4,300 rupees per share. He's been holding on to this counter for the last 2 years. He wants to know what should his strategy be right now for Oracle. Should he hold on to it for the next 1 year? Also, he wants to know, compared to the other IT companies, has this stock outperformed? And if it has, do you see the outperformance continuing?
So there are phases of outperformance as well as underperformance, which I think Oracle Finance has seen. Now, for example, if I try and compare this with 2020 lows, the stock was at 1500, and from there the stock is almost 3x or slightly less than 3x in terms of the price gains. But when you try and compare this with most of the other IT names like Persistent, Zensar, etc., the stock has significantly underperformed. But then when you try and compare this with the recent sell-off or the previous highs for the stock price, it's managed to outperform many of its other peers. So it depends on what scale you are looking out for in terms of outperformance, underperformance. I also believe that Oracle Finance is something which you should definitely hold on. It's a very slow, gradual moving stock. You can't expect fireworks into this kind of a stock price, but on a compounding basis, I think you should probably get that standard 2-digit compounding on a stock like Oracle Finance. So again, as part of your entire portfolio construct, I think Oracle Finance is something which you should hold on.
Okay, moving on then, and Ashish, the next query is on Reliance Industries. A viewer named Kiran from Bangalore is a long-term investor, and he has invested in Reliance from a price of 2,582 rupees. Now at a mild loss currently, but at this point in time, can he average this particular name, and any targets on Reliance?
Well, I think if you invested at 2,500, it's just about 2-3% lower than where the investor has come in. So that kind of volatility is always there in the market. So nothing to worry. We don't have any specific target, but yes, Reliance, given the kind of growth which we are seeing in its various business now, it's a very diversified business set of businesses it has, from oil and gas to retail to telecom to data to IT and various new technologies, as well as green energy and various other things which they are doing. So overall, it's a very compelling story going forward. Of course, it's a very large cap frontline stock, so it doesn't move the way some mid caps would move, and in this kind of market would appear to be a little slow and boring. But if he's a genuine long-term investor, has no time constraints, then I think it's one of the very good stocks to stay invested in. There are a lot of growth engines for this company going forward. So should not get worried by a 2-3% swing here and there. I think, yes, if it does dip to something like 2,300 or lower, then certainly try and average out more. Otherwise, stay invested for the long run. This clearly is one of the great frontline stocks in our markets.
All right, moving on. This one is coming from Anand Krishnan, who's writing to us from Madurai. Kunal, this one is for you. He's bought 100 shares of PI Industries at 3,601 rupees per share. He wants to know what's the short-term prospect of this one?
So I would suggest probably if it comes back to 3,700 mark, 3,720, that's a good time to book profits on the stock price, because in this leg of downtrend for PI Industries, from 4,000 odd levels to current levels of 3,600, the indicators have gone into a negative territory, which means that the stock would either take a lot of time to get into a recovery, or there could be a chance that the stock may drag and maybe go into a corrective phase. So it's best that if you try and book short-term profits, maybe closer to 3,700 mark.
Okay, the next query is on Usha Martin, Kunal, and this one is coming from Seema. She says that she is a big fan of yours and she has bought 300 shares at a price of 54 rupees. Now, if we say the stock is near to that 350 odd level, so good gains in this one. At this point in time, continue to hold on or book profits?
Well, thank you so much for that. First of all, I think it's a tough one, frankly, because Usha Martin has done exceptionally well. Now, a stock which was almost at 50 rupees in 2021, start to now 350 plus where it's trading right now. It's difficult to anticipate that when the top could happen for the stock. I would suggest that you can continue to hold on. Just keep a standard 50-day moving average as a trailing stop loss. So, for example, had you kept that stop loss of 50-day moving average last month, it would have been at 242. Currently, the 50-day moving average is at 327. The stock seems to have not broken below this 50-day moving average over the last 7-8 months of this fierce rally for Usha Martin. So keep that as a standard trailing stop loss, and if it doesn't break this level, who knows, maybe in the next couple of months, you may probably expect a trailing stop loss of 400 plus for the stock.
Right. Basically, I'm going to take a query on power, and it's not your traditional power stocks or the power stocks that you would expect someone to invest in. I have a lot of viewers actually writing to me on JP Power, on Reliance Power, on Redington India Power. I would like to take both the experts' view on what should viewers do. Should they actually even look at these counters, given the fact that everything with the name power is rallying, everything associated with power is rallying? Do you think that it is advisable to venture into stocks like JP Power, Reliance Power, or even for the matter of Redington India Power in order to ride this power, sort of a power surge that we are seeing? What's your take on this, Ashish?
Well, I'll be very frank. I think when it comes to JP Power, I have, of course, been tracking it. I did recommend JP Power way back in 2020 when the price was around 2.5 rupees. Now, JP Power above 9 rupees, I have been advising those same set of investors to book their profits. So I think I haven't really tracked Reliance Power, to be frank. But I think most of these stocks more or less fall in the same category that you invest in them when it is absolutely dirt cheap, because most of these stocks, most of these companies do not really have a very sustainable business model. That's why they're trading so low. But if you really get them that cheap in a bear market, yes, do go, and you have that kind of a risk appetite, go ahead and invest them. But use these kind of upsurges, the one which we are seeing right now, when the power sector is in kind of a euphoria, then even the dirt stocks start moving and they move very sharply. But this is the great time for investors who have bought earlier at those ridiculously low prices available a few years back to book their profits. And actually, you would have made 3x, 4x of your money if you have invested way back there. And these are the best things to book in a bull market, because you never know when this will end, the euphoria will end. And these stocks, I'm not saying all of them, maybe one or two of them might actually be turning around. But most of them would lose this momentum and then not come back for years, or maybe not come back forever. So this is a great opportunity according to me, unless you have some other specific information of turning around of the company. But I think all these companies, whether it's JP Power, Reliance Power, etc., are great candidates to sell, book profits ASAP and move your money in elsewhere. That's my advice.
Book profits ASAP and move out of these counters is what Ashish is saying. But Kunal, what about those who are actually contemplating on investing in these counters right now, given the fact that they also want to participate in the power rally and these are the cheapest stocks?
See, I think I'll just say one thing. Higher returns or craving for higher returns comes with an underlying extreme amount of risk. Now, this is the most important part. Now, in a bull market, of course, we tend to toss out the risk factor because returns become far more lucrative. But once the tide turns, is where you expect that many of these stocks would correct very sharply. Just to give you a standard case over here, JP Power, a stock which was almost at 8 rupees or so in the month of August, fell down to as much as 7. That's a very sharp return. You look at the last 2 years of charts, from 11 rupees the stock fell down to as much as 5 rupees, which means less than 50% or more than 50% correction for the stock in that kind of a time span. So higher returns will come with higher risk, and I think that's the caveat which is required over here. I frankly would not advise buying these stocks even at current levels because this generally epitomizes the frenzy in a bull market. So stay away from such names. There are formidable stocks, Tata Power, Torrent Power, NTPC, etc., where I think the average returns could be far more lucrative as well as sustainable.
Okay, so that's the advice coming in for both of our experts, that if you have already taken that benefit of the rally that we have seen in all these power stocks, the names mentioned before, then you really need to book out profits, or maybe you can continue to ride on the rally with some of the large cap names. But moving on to the next one, then Ashish, this query is on sale. Query is from Satyan from Palakkad, and he's holding 300 shares of sale at a price of 98 rupees 60 paise. What is the 1 year prospect for this particular counter?
Well, I think 1 year perspective, sale looks interesting because I think, two things are favoring it. One is, of course, I think the metal prices themselves are firming up, and I think the outlook seems interesting. I think going ahead, metal stocks, particularly steel, should do well in the coming few months. So quite likely that sale would move higher. It's not one of the best, steel companies, but yes, it is a large company, and so with the sentiment turning favorable, it will show positive returns. I think within a 1 year frame, you will get a chance to book at a higher rate. But remember, it is a trading kind of a stock. So when you get a decent return, 15-20%, remember to book it. The second thing favoring sale, I think, would be the general environment surrounding PSU stocks. They seem to have come back in favor after a long, long time. So a lot of re-rating view, and most of them, including sale, are available at very cheap valuations. So that is another tailwind which should help sale. But like I said earlier, I think when you get a decent return, remember to book it.
All right, so that's the take coming in on sale. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Hello and welcome back to Buy Now, Sell Now, and we are getting your stock related queries answered by the experts, and today onto the show we have Kunal as well as Ashish with us. And Kunal, for the next query I'm coming to you. This one is from Samrat, and he has bought 250 shares of Reddington at a price of 155 rupees. What he's saying, that is the stock actually giving a breakout? He wants a confirmation from you as well as any short-term targets on the same.
So Redington has been an underperformer, frankly, in the last 3 months. I think from 190.95, where the stock topped out, it's gone into a correction. Now, I strongly sense that this is a very strong quality stock in terms of the mid-cap IT names. The stock has been underperforming because of some various events and news flow surrounding the stock price. But I believe eventually the stock should come back towards that 195-200 mark and try and get back into the outperforming zone. In fact, Reddington, if I'm not wrong, was one of the very few stocks from the mid-cap IT space which had actually come back towards a fresh weekly high on closing basis for the stock, I think in 2022 and 23 start. So which means that the stock has potential to try and cover up the underperformance which has been developed of late. I would recommend a hold on Reddington.
All right, this one is coming in from Satyanarayan. He has SpiceJet. He has this counter from the price of around 92 rupees per share. He has 400 shares of this particular counter. Ashish, he's a long-term investor. He wants to know what should he do with his holding in SpiceJet. SpiceJet, not only because it is an aviation company dependent on commodity cycle as well somewhere, but we know what is happening with the aviation counters, especially SpiceJet is marred with a lot of news as well.
Yeah, I think if he's a long-term investor, I think why choose an airline company firstly, and then if you really have to be an airline, then why not Interglobe Aviation, which is a clear leader? I mean, why SpiceJet? I think the going ahead is not going to be smooth at all with the Air India Tata merger likely to happen soon. There will be two formidable large players, one Indigo and the other one Air India. So I don't think SpiceJet is ever going to see great run in the near future at least, and the aviation sector as it is a very, very difficult sector to survive and flourish, and in that why go with the second run player. So they don't like the idea. I think move out of this as soon as possible and put your money somewhere else.
Okay, Ashish, the next query is on Tube Investments. Yuvraj from Bangalore wants to know that can he enter Tube Investments at this point in time? The stock is already very close to its all-time high levels, but is it worth investing at this point?
Well, I would think yes, despite the run-up, I think the company is doing very well. Yes, what you could do is don't buy at one go, try and stagger. So if there is any correction linked to the market or otherwise, you would be able to perhaps average out at a better rate. But it's a good stock idea, worth investing. Yes, the run-up has been there, so maybe don't buy everything at one go. Try and buy a little bit right now, and then use any dips to average and buy more. But certainly a good stock to have in your portfolio.
Kunal, this one is coming from Vidya, who is a short-term trader. Wants to know about Affle. Average price is 1,080 rupees per share. The viewer is in profit in this particular counter, so wants to know what should be the next course of action. Look to book profits or should use this opportunity to add some more?
Quality stock, I think you should continue to hold on. Just confirming a breakout about the 1165 mark. I think that's the previous swing high for Affle. Volumes indicators are quite attractive and strong. I frankly would suggest a hold on Affle, and if you look to book profits, try and gauge the momentum above that 1160 odd mark for Affle. That's where you can probably try and book profits.
Okay, that's the take coming in on Affle. But Kunal, Sonia from Gurgaon wants to know that can you help her with some IT stocks where she can start investing with a strategy of accumulating these IT names. So at this point in time, what's your outlook on IT and any preferred pick from that?
So a lot of names from the IT pack depends on how broadly you can find a mixture in terms of the large cap, mid cap IT names. So for example, something like Tech Mahindra and I think Infosys are two names which you can consider buying at current levels. Formidable stocks, very good charts for themselves. From the mid-cap IT names, I think Zensar is something which has been doing exceptionally well. We spoke on Oracle Finance. That could be a smaller portion of the mid-cap name or mid-cap portfolio from the IT pack. I would be also bullish on the likes of L&T, Infotech, Mindtree. So variety of stocks, I think you can pick and choose from many of these names, but 3 or 4 names is something which I've highlighted. You can consider buying these stocks as part of your broader portfolio.
All right, the next one that I have is coming in from Venkat Ramani from Bangalore, and this one is for you, Ashish. She wants to know about Starlight Technologies. He's already holding around 650 shares of this one, which he purchased at 150 rupees per share. He wants to know fundamentally, is this a good company? Is it a good buy that he's already done? What's your view on Starlight Tech?
Yeah, I think so. I think it's a good company. He's bought it at a reasonably good price. I think stay invested. I think it should make decent profits here.
Okay, Ashish, what's your take on Samvardhana Motherson? Hamsa is holding 800 shares at an average price of 74 rupees. Can she buy more at current market price? She is a long-term investor.
Is it for me?
Yes, Ashish, this is for you.
Yeah, okay. Yeah. This particular stock is very good. In fact, I think the growth in going forward can be very, very interesting. One of the very well-managed, well-diversified auto ancillary across the globe. They have really gone from strength to strength. So, in my opinion, if you time is not a constraint, I think this stock can do wonders going forward. So, try and keep it for at least 3-4 years kind of a time frame. So you could make a lot of money here going forward.
All right, this one is coming from Yuvraj. He's writing to us from Chennai. Kunal, he wants to know if it's right time to enter Shobha Realty.
So good stock, decent chart. I think recently the stock has given a breakout. I frankly was not tracking the stock since quite some time because of the way the stock was consolidating. But on the current charts, it looks very attractive. You can consider buying the stock.
Okay, Ashish, what's your take on Tata Motors? Suresh from Kerala has been holding 100 shares of the same from a price of 511 rupees, now almost 100 rupees profit for him. But do you believe that Tata Motors, the kind of a phenomenal run-up that we have seen, will continue to ride going ahead as well? Or at this point in time, he can sell this counter and maybe switch to some other name?
Well, I think currently the going in auto is very good. I think the numbers are coming very robust across the industry, and Tata Motors no exception. I think the company has turned around the corner very well. I would think that yes, continue to hold on. Though I do agree that the run-up has been fantastic, and not only the last few months. In fact, if you look at the last 3 years, Tata Motors has gone from sub 100 levels to where it is right now. So it's been a fantastic run-up for anybody who's held this stock for so long. But having said that, I think there is still scope for more. I think the turnaround is quite real this time. The company is being very well managed, has a very good roadmap going ahead, and they are. I mean, it's a stock which traditionally has not held, good for long-term investors. But I think that situation is changing, and with the auto industry also doing well, I would think that continue to hold on. There is significant more room on the upside. So stay invested.
Another one coming your way, Ashish. This one is coming from Shankar, and he's holding about 100 shares of Dr. Reddy's at an average price of 4,550 rupees per share. He wants to know, is it the right time to average it, because he wants to hold this counter for the longer term. No doubt he's directed this question to Kunal, but I'll take your view on it, because he's saying that he wants to bet on this for the long term. So do you think that, yes, Dr. Reddy's is the stock to bet on for the long term? He's already sitting on profits. Should he average right now?
Well, generally speaking, pharma has done well in the last few months. I don't know. I don't think it is a great time to now buy into pharma. It is a good stock, one of the frontline stocks. I don't have any issue with it, but I don't know. My own opinion is that the pharma run up in the last 3 to 6 months has been very good. So not the best of times to try and buy more into pharma. I would look at some other industry, but overall, as a company, Dr. Reddy's long term, yes, but not at these levels. And I would wait for a cool off in the pharma space before looking at entering any pharma stock, including Dr. Reddy.
Okay, that's the day coming in on pharma space. But Kunal, the next query is for you, coming from Dr. Saran from Bangalore, and he's holding 100 shares of BBQ Nation from a price of 750 rupees. Amongst the QSR space, is this the right time to switch to Jubilant Foodworks from this counter, and what will be your advice?
Well, difficult to say that whether you could switch to Jubilant Food, because I think most of the stocks from the space looking attractive. Now, there would be a point where even BBQ Nation would also get into that very strong breakout mode. Right now, Jubilant Food looks attractive because of the way the setup is. But then, something like Devyani, Bector Foods, etc., many of these stocks have already done exceptionally well. So it's how trends they generally shape up, where leaders they charge first, and then the underperformers they start to try and cover up the phase of underperformance. I would suggest that you can stick on to just BBQ Nation as of now. If you have extra capital in hand, if you're looking to add or park more money into the QSR space, only then look to park money into other such names.
All right, let's take a note of what the Nifty is doing right now, because we have reclaimed the 19,800 mark. I think, Kunal, we've reclaimed this level for the first time since July, if I'm not mistaken, 19,800 on the Nifty. What a spike actually the index has actually witnessed, isn't it?
Well, yes, a very good move for the index. Bank Nifty leading the charge. In fact, in just the last 10-15 minutes, Bank Nifty spiked more than 250 points to help the Nifty surpass the 19,800 mark.
Yes, as you can see on your screen, that spike coming in for Nifty Bank, kind of replicating Burj Khalifa. Actually, that's exactly how the chart for Nifty Bank is looking like at this point in time. But let's move on and let's talk about another stock. Then this is Macrotech Developers, Kunal. Mahalakshmi from Hyderabad has 150 shares of Macrotech, holding onto this particular counter over the last 2 months. Average price is 715 rupees per share. Wants to know, given the volatility that this particular counter has been witnessing, she's asking, should she just book out profits for this one and enter at lower levels?
You can consider doing that, but the stock has not reached overbought, so that could be advantage you for holding the stock over the near term, that it's not yet reached the overbought territories. And I think on the charts, the stock has just recently managed to break past about that 765 hurdle or resistance. So there could be at least another 3 to 5% on the upside before the stock gets into an overbought condition. So you can consider just trailing a stop loss and holding on to it for possibly another 3 to 5% on the upside.
Okay, since we are talking about the banking space and the kind of a move that all these banking names are giving, Ashish, what's your take on Canara Bank? Raj from Vadodara wants to know at this point in time, can he enter Canara Bank, and what sort of a return expectation should he has from this one?
Well, most of these PSU banks have run up a lot, but like I said earlier, I think there's a lot of steam left still for further growth in the PSU banking space as well as the PSU space as a whole, because these are relatively cheaper and compared to the market as a whole, and also they have never had this kind of balance sheet strength for last, I think, at least a decade, and the credit growth also in the economy is picking up. So there is enough tailwind for them to go up more. I don't have a specific target in Canara Bank, but certainly one of the better PSU banks. And I don't see any reason why it will not move up higher from here. I think in the next 6 months to 1 year, you should make plenty of more money from stocks like Canara Bank in this market.
All right, so that's the view coming in on Canara Bank, and you cannot take your eyes off the benchmark indices. 19,800 reclaim for Nifty. Nifty Bank leading the charge. But on that note, we slip into a break. Don't go anywhere.
सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I want to soar above the skies and fulfill my responsibilities. With LIC. Paid your LIC premium? On time. दिल की सुनो, LIC चुनो।
LIC, हर पल आपके साथ।
To prelude the industry-leading Pharma Pro and Pack Expo, Analytica Anacon India and India Lab Expo, which is scheduled to take place on September 14th to 16th in Hyderabad, we bring you Making India a Pharma Manufacturing Epicenter, a special presentation by Pharma Pro and Pack Expo, Analytica Anacon India, India Lab Expo. A power-packed discussion decoding India's inroads in the areas of innovation, skill development and the journey that lies ahead towards becoming a self-reliant pharma manufacturing epicenter. Watch the episode at these times only on ET Now.
Just say what's on your mind.
I got that offer again today. The one offering guaranteed high returns in the share market. I completely ignored it. Being a responsible investor is my duty after all.
Oh, is it? If the neighbors play the music a little loudly, you go complain to the society. And you'll do nothing about this.
What should I do?
Report it to NSE. Go. Fulfill your duty.
Milk. It's honest, natural, pure, comforting, authentic, refreshing, and blends in like no other. A lot like us, no? Same pinch. Could it be the tiniest reminder maybe, each time we savor it, to be more like it? Spreaders of goodness, that is. Just like milk. Can each one of us be more milk? We invite the world to do more good. Be more milk.
टिप चाहिए, पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा और मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
बीमारी हुई तो पता लगा कि हॉस्पिटल का बिल ऑफिस के हेल्थ इंश्योरेंस से कई गुना ज्यादा है। काश मैंने हेल्थ इंश्योरेंस लिया होता। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 390 रुपए महीने से शुरू।
पानी से भरी बाल्टी जो जल्दी ऊपर लाएगा वही जीतेगा। हर गेम में चैंपियन जैसी पकड़। SRNB TMT।
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And the next query that I have is coming in from one of our viewers who's not written the name, but yes, which are the best stocks in textile space is what the viewer wants to know. Actually, Ashish, Kunal, because she wants a stop loss and a target for 3 months.
Well, there are quite a variety of the stocks in the textile space. I'll stick to the more traditional ones. I think Century Textile is something which looks attractive at 1080 levels for a target of, you can keep maybe closer to 1180 and stop loss at 1040 mark. Trident is something which I think has just recently managed to rise up higher. I think if I'm not wrong, from 30 levels this rally started off for Trident towards 40-42 mark. It's currently at 40 levels, so you can consider buying this name as well. So these are the two stocks which offhand comes to the mind when you're talking of textile space.
Okay, moving on, and Kunal, once again, the query is for you. This one is from Korean. He's a senior citizen and holding 2 counters, 500 shares of Edelweiss from a price of 51 rupees at a decent profits in this one. And he also has Gujarati Pipavav, 500 shares of this too at a price of 116. What should he do? Continue to hold on in both of these counters or book the profits that he's sitting on and rather make a switch to any other name? He's a long-term investor.
Well, you can continue to hold on to both of these names. Now, I understand that both Edelweiss and Gujarati Pipavav are very high beta volatile stocks, but these stocks have given confirmation of breakouts. I've been tracking these names over the last few months, specifically given the kind of volume breakouts these stocks have shown, and looks to be a more formidable move. If you can, I think I would suggest to hold on.
Kunal, one more your way. Very sorry for that, but this one is on from Meenakshi from Hyderabad on MCX call option 1800. Purchase price is 55.
So I'm not sure of the current market price for the stock, but I'm extremely bullish on MCX from a short to medium term perspective. So I think it's better if you can, I'm not sure what's, again, the current price of the call option, whether you're in the profits or at par with respect to your cost price. But if you can hold on to it, that'll be a good strategy. Maybe convert this into a futures trade if possible, if the capital allows, or else look to maybe go for a short on the put options at maybe 1600 strikes or 1700 strikes if the premium is adequate enough.
Okay, moving on, and with this, viewers, let's kickstart taking all your queries in the rapid fire session. And Ashish, the first one is on Ashok Leyland. Anand has bought 1,000 shares at an average price of 120 rupees. Good time to book profits or continue to hold on?
Continue to hold on.
Kunal Prabhu from Dubai wants to know if it's right time to buy. Rain Industries planning to allocate lump sum amount for a period of 2 years.
I think you should definitely go ahead.
Okay, the next query is from Sudeep, and Ashish, he has bought shares of Bajaj Hind at a price of 21 rupees. What to do in this one?
Shift into Balrampur Chini or Avachur.
This one is come from Jaya, who's writing to us from Bangalore. Kunal, one is Finolex Cable 988. What is the target price for this one, and also hold or sell?
I would recommend a hold on the stock at current levels.
Okay, Ashish Girija from Bangalore has bought 100 shares of Idea Forge from a price of 1300 rupees. What's the outlook on this one?
No idea. Let it pass. I'll let it pass.
All right. Kunal, Dr. Ravi from Bangalore, AGI Green Pack 710 is the buy price, 555 shares. What should he do?
Don't track the stock.
Okay, Ashish Dharmesh has bought shares of Yes Bank at a price of 22 rupees. What to do in this one?
Hold on as long as he has no time constraints. Maybe 3 to 5 years is a great hold.
All right, this one is coming from Sukesh from Kochi. Kunal, he's a big fan of yours. 1,000 shares of Finolex Pipes, he's saying at a price of around 246 rupees per share. Wants to know the short-term target for this one.
Stock seems to be overbought. I think closer to 255 levels is a good time where you can look to book profits.
Okay, Kunal, what's your take on EIH? Sana from Chennai has bought 100 shares at a price of 251 rupees. Wants to know the short-term target.
Short-term targets you can keep closer to 264.
Do you have any targets for GNFC? Ashish, by any chance? Padma Sivara from Bangalore wants to know his buy price is 602.
No, I don't have any immediate target.
Okay, Kunal, a power name that is GVK Power. K Parthasarthi has bought the 300 shares at a price of 40 rupees. Wants to know the technical outlook on this one.
Don't track the stock.
Or lastly then, Shrikant from Hyderabad is asking for Birlasoft 200 shares, 451 rupees per share. Ashish, hold or sell?
Hold.
Okay, but with this, viewers, we are completely out of time in this edition of Rapid Fire as well as Buy Now, Sell Now. Thank you so much, Kunal and Ashish, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. But as we leave and as we take your leave, markets continue to trade higher, and 19,800 is what we have scaled past. So it's a goodbye from me and Cheryl and the entire team who put the show together. But don't go anywhere. Markets and Noon will take the action ahead.